Eagles. How's everyone doing? Hope people were able to capitalize on fading the CPI yesterday. I want to welcome our viewers from investing.com. Welcome to FACE, which is an acronym for ForexAnalytix Community Experience. So if you're watching, you're part of our trading family. I welcome you. It's my belief that there are a lot of things that are taught here during our analysis that if you pay attention, and even if you don't have time during the day, that these are great teaching tools that we put up on our YouTube page. So they're there for your convenience, and it's our mission to build up and edify traders every day. So let me attempt to accomplish that with a couple of my views here in the dollar. So last week I was a bit premature, the dollar bearishness right here, and we had one more jiggle up for about 60 pips here and started talking about it rolling over. And then yesterday's big number of the week was the CPI. It was hot, and I felt that it was a little after this and us being back under this line, which is a weekly wedge line that we're now back under. Line doesn't look like it really matters that much. So my belief on trend lines are their destiny is to be broken. So here we are, not too far from new lows. Really the market tell for me was the RSI reading at the low, even though 88.5, there was a lot of technical confluence there. I didn't like this reading. That's really not, it's a very weak reading when you're under 20. So we're looking at about 20 here. So we're gonna make a new low, and then yesterday during the session, after the news was released, talked about it live in here that there was a nice wick developing on the dollar after bullish news. And I think I was talking with Steve, and I said someone's selling the dollar here. And we basically fell apart. Steve and I agreed that the close was very significant. I'm going to be interested in seeing what he has to say. Best guess for me is maybe down around the 87.60, 50-ish level. As you can see, we haven't made new lows yet, but now at new lows, we will not confirm this low. So I'm thinking it takes several days, maybe a week for things to develop. Maybe in this market, it could happen today. One thing you have to be as an FX trader or any kind of trader is ready to expect anything and everything, because everything always happens. So that's my view there. Earlier in the week, I was talking about, and this was early in the week, this was our close last Friday, said we had an off number up around 2750. Maybe the S&Ps aren't going to get there. They haven't quite taken out these lows. I do think they will. But, you know, at any time we could reverse. A lot of people are saying the low's in. And there are people I respect that say the low's in. But there was just so much technical damage here that I would think that we could get one more flush, maybe from anywhere from this 2720 level to 2760. I think it's a short selling opportunity for one more breakdown towards maybe 38%, which is 2468. Equality would be, this was about 350 handles. So if we got up to 2750, 60, that would take it down to 2420. I know a lot of people had targets when we were down here. Everyone was saying 2400. Okay, now they're not saying it anymore. So I still think it's a possibility. And interesting that euro pound is not performing with dollar weakness. That's starting to tell me that maybe the euro pound isn't going to break out. So we've had a nice run here. The fact that the euro is getting ready to press new highs and euro pound isn't, looks like I would abandon the thesis for 93, at least for now. Okay, so this is negative. You know, you could have a long-term opinion, but trading is a continual process of evaluating what price is telling you. And I would have thought with the dollar getting smashed, we would have better action, but the pound is outperforming euro right now. So I'd stand aside here. Let's see what develops into the dollar bottom. It's possible that euro pound performs when the dollar is, puts in a low and starts to rally, and not because it's even though the dollar is in a bullish position, it would be because cable is dramatically weaker than euro. So we could have a big rally in EG with a dollar rally at the same time, which is counterintuitive. You know, I want to give a tip of the hat to one of our guests. You know, I spend a lot of time bringing in good people to help you guys with ideas. And, you know, people say, well, Dale, why do you bring in competitors? You know, you might lose a subscriber, or on Twitter, you might lose a follower. And I say, well, then they needed a different experience. Also, there's no law about how much research you can, you know, pay for or absorb. Of course, I'm not completely objective. I think we're the best, but what a great call by Peter when he was in here talking about 1310 gold. He was expecting a breakout. I think his numbers, I could go back and look at the video, but what he's thinking is, you know, a lot of people are saying this is going to be a weekly breakout, and measured moves are tremendous. But he had a feeling that we might end up with some type of false breakout, even if we go up towards 1400. So, you know, you won't know that until we, you know, break out, and everyone's saying, oh, we have a breakout here over 1360, 1365, we're going to 1500, and I know many people are making the case for 1600. So he was thinking that we'd get a breakout and then negate it. And I think that ties in with him also looking for some type of low in the dollar. So just wanted to tell you guys that if you can't stick around for the interviews, they too are on YouTube. And, you know, our guests bring lots of pearls and thought-provoking things for you to consider. Yesterday, David Brady was excellent. He gives a roadmap, which is a wild roadmap for what's going to happen, you know, the unexpected black swan events and how draconian governments can get. So, you know, I would go back and watch what David and I talked about yesterday. I have a great interview again today with Magic Kev at Magic Kev. Kev does a lot of work with COT. I think it's the third time I've interviewed him here in Face, and he always gets a good response because, you know, he's very diligent, hardworking technician, and a very good trader. So stick around for that. And it's now time for the cleanup hitter to come in, Blake Morrill. I'd like to introduce you on investing.com to Blake Morrill. I'm sure you've heard Blake talk before. He's one of the top guys in the FX industry. Good morning to you, Blake.
Hey, good morning, Dale. How are you?
Good, buddy. So you know, people who bought the headline yesterday, they're selling newspapers today.
Yeah, you know, that was it was a pretty wicked move yesterday. As soon as the number came out, I absolutely just wait, hold on, there I am. Okay, I was trying to get the screen over here. It was taking a little bit of time. Soon as that headline number came out, I bought the dollar. I bought a lot of dollars. I bought a lot of yen. The stock market buckled. You can see it just absolutely, you know, yesterday right here after the CPI number just crapped the bed. And I did really well. I got in, literally got out. I literally got out like
probably 10 minutes.
I want to say, yeah, I was out within like 5 minutes. I mean, I just counted everything and did really well. I had actually just so you guys know, I had it ended up not being. I thought it was going to be my best day of the year thus far, but it ended up being shy of my best day. I went back and looked, and I'm like, oh, you know, it wasn't my best day.
Thank God you're a trader.
Well,
and then, you know, I know you're very opportunistic. I love that about you. You know, you may have macro targets longer swing targets, but every time you get big candles your way, you go to the door with a lot, or at least half. And
yeah,
I think people could learn that from you, that when the market's offering you windfall profits, even if it's intraday, you got to go to the door.
Well, I did, and I took it, pretty aggressively. And like I said, I bought yen. So you could see the dollar yen right here came under tremendous pressure. The euro yen came under tremendous pressure yesterday, and I had Canadian yen, I think it came under pressure. But what happened is I took.
Why didn't you reverse?
The thing is I didn't expect the dollar to completely fold like a cheap suit. So when I hit the dollar and I hit the yen and I took all of these trades down, and it was literally like 5 minutes, I was in and out, and I crushed it, absolutely crushed it. When we started to get the retracement, I started to fade the retracement, because I'm like, okay, this is just a retracement. We're going to come right back down. And then I ended up taking some losses as they came through, as the dollar continued to reverse. And at that point in time, after zapping some of my profits, I was like, and taking away what could have been my best trading day of the year, I just sat back, and I was like, I was sitting there mostly in disbelief, looking at the market, going, oh my God, I can't believe this is happening right now. And so that's how I traded it yesterday. And it was, like I said, it was a quick initial gain, but I ended up giving back some of those profits as the market continued to reverse. And I'm going to tell you, I cannot believe the response that we saw in the dollar based on the stronger inflation data. And even reading analysis from banks this morning, as soon as I get up, I start reading, several different, daily, analysis from different banks. It's the first thing I do in the morning. Is everybody's kind of scratching their head, thinking the same thing, like, wow, I can't believe the negative dollar response, and B, the positive stock market response to yesterday's data. And then you take into account the rise in yields, and yields just continuing higher. It's pretty mind-boggling, and that's why I stepped aside yesterday afternoon. I kind of got out of some of those losing trades after my gains. I tried to step in front of the train and got run over a little bit, and then I just kind of sidestepped out of the way and watched the carnage, and I was like, wow, I mean, it was pretty unbelievable. Now the question is, what time, sometimes we get like a day late response, like, maybe the stock market shows some restraint today, if producer prices, which we have PPI coming out this morning, if producer prices come in a little hotter than expected, maybe the dollar reverses a little bit. I don't know. I think it is, in my opinion, it was pretty wild how aggressive the move was yesterday. It just shows you how bearish the dollar is, and how correlated the stock market dollar correlation is right now. The dollar weakness really is playing a part to the stock market strength. In other words, the stock market really likes this dollar weakness that we're seeing, and that should be noted, because if you caught the ForexAnalytix blog, and by the way, if you guys don't know where that blog is, it's just on our homepage. There's a blog here. It says the S&P may have peaked near term, but what does that say about the U.S. dollar? Something I wrote last week. Make sure you give it a read. It's obviously part of our free section in our on our website. So make sure that you read that blog, and I think that correlation is alive and well. And so with that being said, I think that, you know, I'm paying very close attention to what's happening in equities, because it's obviously having a very big impact on what the dollar is doing right now. And that's important to note as we trade, you know, as we trade currencies. Now, one thing that I can't get past right now is I can't get past and is the weakness of the dollar yen. Now, that doesn't, it's not just the dollar yen, it's all the yen pairs. Look at the, okay, here's the dollar yen. Now, for those of you that don't know, the dollar yen has broken out of a major triangle, lower, multi-year, okay? And actually I closed out the pattern in play yesterday of the triangle pattern in play, because the risk appetite was so strong yesterday afternoon. I was afraid that the US dollar Japanese yen might go back and retest 108. Well, guess what? This dollar yen has stayed weak. And matter of fact, we actually traded as low as 106.15 last night. I had to reestablish that pattern in play from a longer term perspective, because we're broken down. This is a serious breakdown. Now, everyone might go, well, that's just the dollar, Blake, because the dollar is getting creamed everywhere else. Is it? Because if you look at the euro yen is starting to show, you know, obviously a top here, okay, after a false breakout up there. We've been stopping around this confluence of support, but the pound yen out of its ascending wedge, the Aussie yen below major trend line, the New Zealand yen, you know, we've cracked some support holding the 618. The Canadian yen has a big double top in play. So you know, if you're sitting there looking at the dollar yen saying, well, that's just the dollar for you, it's not. It's all the yen pairs are actually making this decisive move lower, and that can also be a risk for the stock market as well. You know, especially if the stock market, and I want to go back over to the S&P, some analysis that I sent out this morning for ForexAnalytix is we are back at the 50% retracement, a little higher than the 50% retracement, but notice how we actually made a lower high thus far this morning. Now, it's still early. The U.S. stock market has not even opened. So the stock market can open and we could be trading at 2760, you know, and based on what we've seen the last 3 days or 4 days, you can't rule that out. You know, you can't rule out a continuation higher in the stock market. However, if we stop and the stock market does not break highs or break these highs from over here, okay, so let's just put this in right here, okay? We do not break highs from the 7th, which was last week. The risk is that we actually made a lower high in the S&P, which means that the risk is that we're heading back down. Now, are we going all the way back down to these lows, to the 200-day moving average, which is down here? I don't know, but the risk would be lower from here if the stock market cannot take out these highs on the day. So I'm carefully watching stocks, and the reason why I'm carefully watching stocks is because as a currency trader, if the stock market does roll over, that means that the dollar is going to strengthen and also the yen. So now you go, well, you know, well, could the dollar really strengthen from here? Of course it could. Look at where we're at. We found a lot of support down here. Now, if you don't know why we've found support in the dollar index, let me refresh your memory. Let's go over to the daily chart, okay? If you look at the move from 2016 low, okay, to 2017 high, and this is, you know, right when Donald Trump was inaugurated, like literally that day, we're at 127% extension. If you take the last range that we had from the lows of last year to the highs that we posted in November of last year, that consolidation, It's 161% extension. So we are consolidating, or excuse me, we have found support at this major level. Now, with obviously, if we start breaking into new trend lows in the dollar, you can just kiss it goodbye. I mean, the dollar, you can just stick a fork in it. It's done. It will be, in my opinion, just destroyed from here if the dollar index starts trading into new lows. But this is such critical support that it wouldn't surprise me if the stock market found some support here. Okay, or excuse me, because of the stock market finding resistance, it wouldn't surprise me for the dollar to find some support here. Now, the dollar, keep in mind, the dollar's been beat up the last several days, and we are near trend lows. So if the dollar starts to bounce again, it's not going to surprise me that we're trading in this range. All right, and based on where stocks are at, it's indeed pretty possible. And like I said, yesterday we had a very strong CPI number. Inflation is coming. At least it feels that way. It feels like inflation is coming. I mean, I know people have been saying that for a long time. And actually, I'm gonna take the other side of that. Is I've been for the last several years on a daily basis, I've been very hesitant about saying that inflation is coming. I'm like, yeah, I know it's ticking higher, but I don't think inflation is really ticking higher. But the bond market now, with yields moving higher, is telling you that inflation is probably coming. And Dale, you know this better than anybody. You've been in the markets longer than me. I mean, I've been trading the markets for 23 years now. And you've been on what, 35, 40 years?
Yes, a long time.
So who's the smartest guy in the room or gal in the room? Is it the stock market traders? Is it the bond traders? Is it the currency traders? Who the guys you got to be paying attention to?
I think right now, they aren't persons. I think they're machines.
Okay, but what market should you be paying attention to? Is the canary in the coal mine is the bond market. And if the bond market, the yields are screaming, it's telling you that rates are going higher. Rates are probably going higher because inflation's moving higher. We're starting to see inflation, wage inflation. We're starting to see, consumer inflation. And if PPI ticks higher today, maybe the dollar does actually rally. Maybe traders are like, yeah, I've seen, and I see inflation coming at the consumer level, but it's never making its way to the producer level. So if producers aren't feeling any inflation, it's not gonna trickle all the way down to the consumer. Well, how about if PPI comes in stronger than expected? If PPI comes in stronger than expected, and we see, a tick up of 0.3% on core PPI, maybe it freaks out the market a little bit, and maybe the dollar gets a bid because of it, and maybe
the money and currency markets is even smarter than the money and bond markets, because I've seen a lot of currencies lead eventually what bonds are going to do.
Yeah,
especially in the end.
It's possible, and
they're bigger, deeper.
But I don't know. The dollar sold at every rally, and and it's not able to catch a bid no matter what, and it's ignoring everything. So who knows? But I will tell you that we have to watch stocks today. I think stocks are going to be they're showing some signs of weakness. If we make a lower high, it's not going to be very bullish for stocks. The risk would be for the S&P to trade back down to 2,600, maybe even lower. 2,600 is not too far away. I mean, you might say, well, it's 100 pips or 100 points away in the S&P, which is, a long way away. But I don't think this down here is too, based on what
10 minutes.
Yeah, well, based on the price action that we've seen in stocks, it could happen. So. One last thing, and not very many people trade the U.S. dollar, South African rand. I'm keeping a very close eye on it today. President Zuma has resigned. We have President Ramaphosa he's declared the new president of the country. It's quote unquote supposed to be very positive for the rand, and we've seen the rand, in anticipation, move the rand move higher, or the dollar rand move lower, because of this. But let's also note that a lot of times in the market you get the buy the rumor, sell the news. There's a big 127% extension of this last move, where we're currently trading right now in the USD ZAR, or the rand. We've pushed to new lows. Relative strength is not following. Matter of fact, relative strength is very divergent. I would not be surprised to see buy the rumor, sell the fact, and the US dollar rand from here rally, especially if we get a little bout of risk aversion. Then we're going to we're gonna see the emerging market currencies come under some pressure. So I just want to bring that up, because some people trade it, not a lot of people. I keep an eye on it. I trade it periodically from time to time, and I'll tell you, if I see a bullish candle form here today, I'm getting long, meaning I'm shorting rand, is what I'm doing, because this how'd that get down there? This divergent relative strength is very telling to me. And so anyway, just something that I'm paying pretty close attention to. All right, I've got to go, because producer prices are coming up in just a few minutes, and I'm gonna pass it over to my colleague Steve. Steve, good morning.
Hey Blake, good morning.
Hey, good morning. How are you?
I'm good. How have you been?
Good, good. Just trying to get my head straight ahead of the data. So
big surprise yesterday, indeed. The way the markets reversed.
The market. It was ridiculous. Yeah, it was ridiculous. Yeah. I didn't get it, and I still don't get it. And yeah, like I said, all the reports that I read from different banks this morning, everybody's scratching their head, going, "Whoa, what was that all about?" So. Anyway,
although I know very well that from your experience as well, it's not the first time that you see a reaction that at least doesn't seem to make sense, after a print. That's why I'm always extremely careful, and when we have important data, for me always the first indication is how we close the daily candles, because we've seen reversals and reversals of reversals. So sometimes the market just wants to do its own thing,
right?
Yeah. So
the room was aware of that possibility after the news, don't you think? Our room.
Say again.
Oh yeah, a lot of guys and gals traded it successfully yesterday. Yeah. And
I thought it was a fade yesterday. I didn't know the fundamental reasons why, but just felt like the dollar had not bottomed, and I'm thinking 87.5. The king was coronated prematurely, is the way it looks to me.
Yeah, we have some.
Hey guys, I've got to get going. I'm going to let you guys continue on with your conversation. Talk to you soon. Bye-bye. Good luck.
Okay, let's have a look at the DXY as we're waiting for PPI data, because as Blake said, the PPI data, is going to be important. I mean, if after the CPI, the strong CPI print, we also get a strong PPI print, we might see like a triple bottom. Personally, I kind of doubt it, in the sense that, once we came back to test the lows, the chances are not good to hold this level. But you can never be sure. As Blake said, if we see a strong PPI data, anyhow, PPI is expected to be rather strong. I mean, the expectations are for a 0.4, if I remember right, month-on-month print, which is quite a strong one. So, Stelio, are you here, by the way?
Yeah, I'm here, yes, waiting for it. It is 0.4 from minus 0.1 last month. So
yeah, so it's
got the Fed and New York Empire State. We've got a few numbers coming in right now.
Indeed. It's a few seconds. Let's see.
Empire State is weak. PPI is in line, although year on year is a little bit higher.
Okay, so in line, but 0.4 month on month was anyhow quite strong as expectations. Yeah, you're right. Empire State it's 13.1 versus 18. PPI 2.7 versus 2.5 expected year on year. So overall, a good PPI number. I mean, a strong PPI number. And keep in mind, people, that PPI is considered to be an indication for CPI, because it's in essence the prices that producers are paying, and of course the market considers a high possibility that increased prices for producers will be transferred sooner or later to the consumer by increasing prices.
It leads the CPI. By the way, also Philly Fed came in strong, 25.8 versus 21.1 expected. So numbers.
So in general, theoretically speaking, we had good numbers having to do with the response they should have to the US dollar. But so far, we aren't seeing any real response you see here in the market. Let's have a look at the USD yen. More or less, everything is, we are seeing a little bit of dollar strength, but nothing to write home about. In essence, the market for the time being seems to be completely ignoring the prints. We are off the highs though, for Euro USD, for pound. Definitely the Aussie has turned around today, but yesterday it was looking like it's going to have a big reversal as well, and we then ended up having a big a big candle higher. I got stopped out at break even. Good thing I got a good entry price. Bad thing, it didn't show the follow through, because I was really expecting at some point that I'm going to get a nice a nice trade, because I entered quite at the high of the market, actually at the high of the markets as it was in the morning. But then we got that big reversal. Today, the Aussie is attempting to reverse once again, but it's too early, so we'll have to see. I have no position now. Actually, I have no position whatsoever in the market at the moment. And I'm really waiting to see what's going to happen, by the end of the week, what kind of follow through we're going to get for, especially for the US dollar and for risk, because Blake mentioned it. And, he said that, we're coming on some areas of resistance here. Personally, Blake said it as well. I believe that obviously the fate of the dollar and the fate of risk at the moment are going to be tied up, at least somewhat, as long as treasuries keep pushing to the downside. And as you see, we are about to test our next target, which is the 161.8 extension of the large corrective move higher. We had a multi-month corrective move higher. It started in the end of 2016 and found a top in the first days of September 2017. So that was a prolonged corrective move, and we're now about to tag a very, very important. I mean, 161.8 is considered as one of the golden fibs. It's also a round number. I mean, it's 120.08. Okay, let's say 120. So this is also a psychological number, and we need to see if we're going to get some reaction from there. Definitely, considering the fact that the markets got scared and sold off, because yields were accelerating higher, is something that should be troubling people. Because if we don't find any support here and we break through the 161.8, just keep the big picture in the lows at 2011, at an area we had tested last in 2011, which means that we definitely had a major development after breaking below these areas there. And definitely, if you have a look at the big picture, there is a lot more potential for downside, right? And oppositely, of course, the exact opposite is for yields. If you look at it here yesterday, we were noting that this is a triangle that will likely break to the upside, as exactly it happened, even if that's going to be for one more thrust. And as you see, we've pushed above 2.9%. This is the 10-year yield, right? And something else to note here, there is a very scary picture in the long-term chart. and it's this one. This is the yields chart, I repeat, right? The 10-year yield. So, you know, if you interpret this as a large inverted head and shoulders formation, we get a target that's above 4% yield. And honestly, I have no idea how the market can digest an ongoing move like this, because, you know, in part, the risk on move we had was, you know, due to low yields, easy money, etc. And now we're seeing a reversal of all that. And the market, in, you know, besides that 12% move lower that we saw, seems to be stabilizing and just, you know, starting to try to forget the fact that this is what brought jitters in the first place. And keep in mind that, you know, increasing yields means increasing deficits, means increasing debt, which, you know, obviously, at least in the long term, should not be taken positively, you know, any way you slice it. So, you know, this is something that something else. There are a lot of people that are noting remarkable similarities with 1987 before the crash we had there. I mean, increasing yields, falling dollar, increasing stock markets. So, you know, this is something to note as well. Okay, let's have a look at a few of the questions, and let's see first if we get any, if we got any real follow through. Stock markets were off trading hours on the highs. At some point, we were, I think, a little bit more than 0.5% higher in the SPX. We've pulled back a little bit after the PPI print, but as I said, the market seems to be more or less numb to it. I mean, from what I see, the dollar is not really making any breakthrough. So, in my opinion, let me go back to the DXY and let's go to the 4-hour chart, because I do think that the chances, after we failed yesterday, to at least rebound higher from there are for a push to the downside. So if we go down to the 4-hour chart, you'll notice here that if we want to get some downside targets, we're just going to fib this corrective move, and we're going to see that we have a 127% fib extension at 87.86 and the 161.8 at 87.12. So, you know, a break from the lows here, which seems quite likely to me, especially since we didn't even manage to react positively. We didn't react positively to the CPI yesterday. We don't seem to be reacting positively to the PPI print today. So, you know, the chances for a break to the downside are obviously very, very high. So, you know, the areas to watch are 87.86 and 87.12. I still believe that, as I had said when we found the low here, I still believe that, you know, despite the fact that obviously the dollar remains bearish, it has been in a bearish trend since the very, very, very beginning of 2017, the first, second trading day, something like that. I still believe that this is not anymore the place to be looking to be shorted dollar, because, you know, the dollar is oversold in the short, medium term, and there are a lot of risks for, you know, some brutal rebound at some point. So there are pairs that are that still provide opportunities to be short the dollar, of course, but there are other pairs that provide opportunities to be long the dollar. And in my opinion, even if we keep drifting lower, we are not going to see a massive, you know, weakness all over the board from the dollar. And
yeah, what's interesting, Steve, is would one of your candidates to be long the dollar before even long the dollar USD CAD, which is now making a new low, that looks like if the dollar bottoms, we'll get a higher low in Canada for the next.
Yeah, and a lot of people are using that as a barometer, right, for the US dollar. I mean, the USD CAD. Since
you know, and I don't get this thing that everyone was so surprised at the reaction of the CPI, because obviously some people weren't surprised because there were a lot of sellers up there.
Yeah, there were a lot of sellers. There's no question about it.
So I mean, not everyone was surprised that the dollar reacted the way it did on the news. Right?
Obviously, the market proved
Okay.
that was the case.
That's all I'm saying. I mean, people could be surprised, but the market wasn't surprised.
Oh, the market will always do what the market wants to do, right? There is no question about it. And trying to fight the market because you have a specific thesis makes no sense, right? You always should try to align yourself.
I was happy, and I hope it served some people when I saw it up there after the news that the dollar could fail, that maybe some people got out of the way or even capitalized on it.
Yeah, it was a good call. It was a good call. So you mentioned the USD CAD, and you're right. The USD CAD did not follow through to the upside. Although keep in mind that in general we are seeing a theme, and it's not that it started yesterday, that some of the commodity currencies in general are behaving better than the dollar is behaving better against the commodity currencies, and that made me even more surprised with what we saw here in the USD CAD, right? Because USD CAD is a commodity currency, and
we could get our second higher low if we hold that 123.
That is true. That is true. Although we have to be fair here. There is a correlation. It's not as strong as it used to be, or anyhow, it's not as strong. Yes. And we did get quite an important rebound yesterday from oil. I'm still not convinced that we found a low in oil. If you remember, I said it plenty of times. I was looking for a low at 58, even when we were breaking, from this area, the 63, 64 area. Yeah, but the speed in which we came down to retest 58, it was too fast for me. I think that that holds me off from being long. Otherwise, I would really want to buy it in general at 58. But it holds me off.
That could pressure the S&Ps if we get your break to 55.
Can happen.
And the dollar turns. Huh?
Yeah, it definitely can happen. Yes.
Yeah.
It can happen for sure.
That would pressure the market.
It can happen for sure. Yeah, absolutely. The other asset that reacted strongly yesterday was gold. I mean, gold had a massive day yesterday after showing that it was reversing to the downside. It had a massive day to the upside, and in all honesty, it looks. This structure looks bullish to me now. I mean, after especially the day we got yesterday, it looks to me like it wants to at least push to a new high from here. So, I would be very careful being short gold. I attempted it a few times. I made some profits and got stopped at break even in the other half. But honestly, I'm not looking to be short gold here. I might be looking to be short once again at a break to new highs, because it looks to me like this was a corrective move to this move higher, and a push to new highs, and then we can fib the correction, so we can get some targets for that. So for example, if we fib this correction, for example, there you go. We have a 127.2 at 1382. We have a 161.8 at 1402, 1403. That would also be very nice, because obviously breaking to the next big handle to the 1400s might get a lot of people being enthusiastic and bullish, and then we might get some kind of a reversal. The reason I'm saying that is because, as I said, I don't believe that the dollar's massive weakness that's been ongoing since the beginning of last year can continue for much longer before seeing a bigger correction higher. I am bearish. I'm very bearish the dollar in the long term, but I'm not, and I haven't been bearish the dollar in some time now in the medium term, because I believe that some type of a stronger correction is going to come. It's definitely going to get the market completely off guard. And I've already seen dollar diverging. I mean, at a big part of the move lower, we were seeing that mostly every dollar asset was strong against dollar-denominated asset was strong, against the dollar. But now we are seeing that assets are diverging with each other. So we're seeing some assets that are not behaving that well anymore against the dollar. And I do think that these are the first signs that we are going to get a strong reaction at some point. So I'm selectively strong. I'm selectively long or short the dollar against specific pairs from time to time. You know it because I'm always sharing, what I'm doing here. And the reason I told you is exactly that. So I would caution against people being massively bearish the dollar. I think this is a very common theme nowadays, and usually very common themes and things that everybody consider consensus always end up being the next thing that's going to blow up, right? We've seen that happen over and over again. Anyhow, let's have a look at a few of the questions that people are posting, and let's have a look at what they want us to see. Copper, absolutely. Yeah, and something, we had a conversation about copper plenty of days ago. Once again, you remember we were talking about how clearly this was a corrective move lower, and no matter how many times people asked me, I said that I'm viewing this as a corrective move. We found support here. It was a nice area. It was a previous trend line resistance acting as support. This was a nice megaphone formation, and we're currently testing within 3 days. Within 3 days, we recovered the vast majority of the losses in this corrective move lower that lasted several days. And this is another sign of how you can easily distinguish corrective from impulsive moves, because simply corrective moves might take a lot of days to cover little ground, and impulsive moves might take very few days to cover a lot of ground. And we're currently testing resistance once again. So obviously this is a key level for copper, because if we actually push higher from here, we get the final confirmation that we need, that this was a corrective move lower that has already ended. It ended there, and that means that we can then start fibbing this correction to find new upside targets. Obviously, the first target is going to be the 78.6 of this move lower, which is at almost 3.4. There, you can see it here, right? And we can get a 161.8 fib and see where that falls. See, 3.5. So we have, and as you see, this is a double confluence of resistances, by the way, because that wasn't only the 78.6, it's also the 127.2 of this corrective move lower. So we have a confluence of resistances at 3.4, and then the next target is at 3.5, the 161.8. So I think that we have some clear upside targets. We might consolidate here at resistance for a day or two, but a break to new highs seems very, very likely, especially considering the price action. So I think that having stayed bullish, copper was the right thing to do, and I think the market proves it. Let's see what other questions we have. Wait, I have a lot of things to read here. Hi Steve, what do we do in GBP USD? I'm short from a bit below. Let's have a look at it. Before that, actually, I'm going back in time. Oh, we have a lot of questions today. Let's see. Blake, regarding risk, the correlation with risk off seems to have been broken. USD JPY is broken. Do you see this filtering through maybe to other traditional risk off type of instruments like Euro Kiwi, Euro Aussie, Pound Kiwi, and Pound Aussie? Zach, that's a good question. Yes, it might happen, but I do think that this decoupling of these correlations is temporarily here. It's not here to stay forever. So I do think that when we get some real risk off, as we saw for these few days, recoupling of correlations is more or less going to happen. And I do think that this loosening up of very, very well-established correlations is also another signal that this market cycle is closer to an end than anything else. Another question about EuroCAD. Yes, I'm going to have a look at EuroCAD a little bit later. Let's go through the other majors, and I'm going to have a look at the euro and pound crosses. Total USA debt is increasing by trillions under Trump. Why would the world want dollars or USA debt? Fed is decreasing also. Brett, that's a good comment. That's why I also told you that I'm really bearish the US dollar in the long term, but I don't think this is the time to be bearish the dollar in the short to medium term. In the short term, if you consider short term a few days, yes, of course, you know, you have every reason to be bearish. But when I say short to medium term, I mean, you know, several days to several weeks. Okay. Dollar going lower. Yes, might be the case, but as I said, I believe that we're going to get a big rebound at some point. So let me go to the pound question, because we can see that now. Okay, here's the cable. First of all, I have to tell you that we said it plenty of times. I don't have a real reason to be bearish the cable as long as we remain in a well-established uptrend. Even if this proves to be a large corrective move, it's still a multi-month move that we've only been seeing from the cable higher lows, right? The definition of an uptrend, at least in this time frame that we're looking at the moment, because if you zoom out, then you can definitely consider this to be a large corrective move to the larger bearish trend for the cable. But, you know, just by viewing this picture that takes us, you know, that we can see from the end of 2016 until today, you know, what can you see here? This is a sequence of higher lows, right? There you go. Have we broken the sequence? Absolutely not. I would at least need to see a break below this area, the 136 area, for me to turn neutral and start considering, you know, bearish propositions for the cable. Until or unless that happens, and if you see, we also found the support at a very interesting area of levels. It was the 61.8 of the last move lower from the Brexit, retested this time, you know, from the upside. I also had some other technical levels. So you know, bottom line, I'm not telling you that this cannot happen from here, but I'm telling you that being short cable is a dangerous proposition here. We really have no signal that you know, the trend is changing, right? I need to see more evidence, and since I'm not a short-term trader, on occasion I'll trade short-term, but you know, I'm always trying to trade, you know, keeping the big picture in mind. I don't know. I fail to see what would give me enough conviction to be short, right? Obviously, if we fib this, we're testing, you know, some fib resistances. I think we should be like above 50% fib, perhaps approaching the 61.8. But still, that's, you know, a fib resistance is not enough for me to be bearish. So I think, you know, you should be careful. And the exact same thing applies to Euro USD. I see a very high chance that Euro is going to push to new highs from here, right? I said it the other day as well when a friend of ours here in the show mentioned that this can potentially prove to be a head and shoulders formation. And I said, yes, sure, it can. But since, you know, we remain in an uptrend, you know, this is not my main thesis. My main thesis is that, you know, the chances of a push higher are still higher than, you know, dropping from here. So as you see, you know, the 61.8 at 126 will probably act as a magnet, and it wouldn't surprise me to even see higher prices from there, because simply if we fib this last corrective move lower, which if you remember we mentioned explicitly that everything about this move was looking corrective because it was slow, it was somewhat overlapping. It didn't produce any kind of momentum that would make you feel comfortable about going short. We didn't even manage to break a single important technical level. I mean, we had this ascending channel. We didn't even come down to retest it. We had this area at 121 that produced the high in September, and then we retested it, and in the short term we failed for a second time here. So unless we at least broke below this ascending channel and then 121, there was no real bearish scenario to consider. So as you see, we also have a 161.8 extension at 127.15. I think that these targets are actually easily achievable. That might also coincide with channel resistance once again. So for example, if we extend this channel, you can see that perhaps, for example, we can find the 161.8 extension at the same time, more or less, that the channel is going to be passing from there, and then have a double confluence of resistances and look for a larger move lower. So I do think that in the short term, the DXY has more room to move to the downside. We already gave some targets since it failed yesterday. Before we can be trying to bottom pick it once again, right? So I think that's the situation with the euro and the cable. High rates and stocks up. Let's see, Ronit is giving us a chart to look at. Yeah, the 10-year yield. It's what I showed before. Yeah, and you know something? Here is the head and shoulders formation I showed you before on this chart as well. Let me draw it. There it is.
It's like a Ronit chart, is it?
You see?
He's a great technician.
Yeah. Always serves an effort.
I just sat on a pitchfork. Ow, Ronit, I'm suing you. All right.
Guy says strong numbers, sell the USD, which is true, right?
We need some real weak data so the dollar could rally, buddy.
Fundamentals as always nonsense.
We need recessionary data, and
yeah, indeed.
Could smoke. Yeah.
Fundamentals as always nonsense. I completely disagree with that statement. Fundamentals are not nonsense. Fundamentals are always what matters, but in the long term. So I've said it many times. You cannot trade with fundamentals because you cannot time trades with fundamentals. But you should definitely keep in mind what fundamentals tell you in the long term, because always markets converge at some point to what fundamentals say. Unfortunately, you can never be sure when that point is going to be, because the markets have made it a habit of ignoring fundamentals for prolonged periods of times, but when they decide to start paying attention to fundamentals, we usually see convergence through brutal moves. And when I say brutal moves, I mean brutal moves. So usually,
pearl, Steve.
Yeah.
There are many tombstones of economists trying to predict markets. There's a graveyard full of those guys. So,
absolutely.
Yeah. So I mean, you never know where the tipping point is. That's why we look at charts.
Absolutely. Can you show this chart? Absolutely, Ronit. Let me show it.
Then we have the magic man in the house, Steve, for our interview.
Oh yeah, it's already 4. I showed this chart. Oh, sorry, it was the same chart second time. Sorry, mate. Steve, can you look at copper? Yeah, we did that. CPI will influence price action for weeks to come. Thank you. Steve, are you still of the mind that yesterday's data CPI will influence price action for weeks to come? I definitely would think so if dollar had responded to it. And I do think that this CPI number, if we get another catalyst that actually the dollar is going to start paying attention to, can also then influence as well, because we got strong CPI, we got strong PPI, and the market for the time being, although yields are going higher, seems to be ignoring it. So in essence, bonds reacted to this data because, let's be honest, the market as an entity did not completely ignore the data. The bonds reacted as expected, but the dollar didn't follow, right? So do I think that this divergence can keep on forever? I mean, yields going up and dollar falling? No, I don't.
Well, it's been going on for quite some time. Steve, do you have anything on your Dixie chart around the 87.5 level?
Yeah, I showed it before. We have a 161.8 extension at 87.12.
Okay.
It's 161.8.
All right. So I think between your 1.27, 1.618, if the RSI is not confirming in the next several days or a week, whatever, we're close, bro. I think this is the last flush before a pretty vicious bear market rally in the Dow.
Might be. My intuition tells me. My intuition tells me.
Yeah.
No. My intuition is completely in par with what you're saying.
So watch Steve's bid levels going ahead. You know, you may want to write them down because I know they're not on your chart. Watch those levels.
I know you have. I know you have an interview. I promised our friends here to have a look at euro crosses, etc. So we're going to do that in the chat room and tomorrow. So sorry for not having the time to respond to everything. We're going to have a look at euro crosses and pound crosses tomorrow the same time as always, right? And for the friends that are from investing.com, you can always register. You can go to ForexAnalytix. You can register for free because this webinar is daily. It's not only once per week. It's daily, so you can be here every day if you wish. It's free. You can register just by giving an email. You can find the link on ForexAnalytix.
Best free live FX room on the net, in my objective opinion.
Okay, Dale. Enjoy the interview, my friend.
Steve. Good job, man. All right, let's go with Kevin. Kevin, I'm going to make you the presenter. Really appreciate you being a pinch hitter and stepping up for me. You have a huge audience. I hope it doesn't make you nervous. I don't think it will.
Can you hear me?
Yeah, Kevin. How are you, buddy?
I'm good. How are you, man?
Good, God. It's so great that you were able to come today. And, I didn't give you a lot of notice, so I appreciate you adjusting your schedule to address the community, I think, for the third time, right?
Actually, you know what? I was going through our history. I think this is going to be the fourth time.
Yeah, I'm on. Previous, it was on FX Street, right?
Yes, you got it.
Yeah, okay. So in face, I think it's three. So I'm interested. I know your history, and I know you do a lot of great work with pivots and COT stuff. And my view is that we're getting closer to an inflection point in both the euro and the dollar for something counter trend. I'm wondering, we have the euro up here, Kevin. What are you seeing?
I'm seeing that institutions are taking profits on long positions. By looking at the COT data, I can see that they were bullish for quite some time, and they were aggressively bullish. And taking a look at the data, you could see the last 6 weeks they've been extremely aggressive with their longs. About 60 to 70% of their overall exposure on the euro has been geared to the long side. So there is room for them to go higher, but we're hitting supply. They're overly aggressive. So what are they going to do? They're going to take some profits. They're going to let price drop. They're going to regroup, and they're going to get back into some more long positions. That's what I'm saying.
How are the commercials positioned in here, buddy?
Well, you can see that they are more aggressively short because they always take the opposite side. So combining commercial and non-commercial, the difference is a positive 320,000 positions. So very, very bullish.
Very okay. That's bullish for the euro.
Very bullish. Yeah.
Okay. And small spec hedge funds, they still have they lightened up on this rally, or are they still pretty aggressively long?
Yeah. So so as we were getting this move up here,
Yeah.
you know, we're hitting this area here. This is a monthly area of supply. It's pretty strong. It can break. It's not likely that it's going to happen right now, but it can. So as price was heading right up into that area of supply, Dale, what we see is that institutions were increasing their long positions right here from 236, 242, 254, 262. And at 262 is when price came right in here into this area of supply. So this right here is a weekly supply zone nested within this monthly area of supply. So once price came up here,
Yeah.
sorry?
Go ahead. What's the upper range of that supply zone that you have there in gray?
Upper range is 125.70.
Okay, and then you have another supply area above it in a darker color.
Yeah. Yeah, so this here is another weekly supply area. It's a valid supply zone, meaning by looking at the charts, I could tell that that's a valid zone that price is either going to react from, or if that zone gets taken out, then that'll be a significant accomplishment.
Yeah. Okay, so we might be headed towards the end of this particular wave. Is that the most you could get out of it with what you see in COT, and technically one more high might be it for a while?
Well, what I'm thinking is going to happen based on looking at the data and the charts is we'll probably see a move coming down here on the euro, and probably come somewhere around the 120 area where we'll see them adding in longs again.
Okay.
That's what the probabilities are.
Right. Everything's probabilities. You know,
right.
People, have you noticed, Kevin? There's never a perfect trade. Just
Never.
higher and lower probability trades.
Exactly. Yeah.
You know, and you know, I mean, I'll do a little mentoring right now. I've seen a lot of people trade, and they want it to be perfect, and every indicator, everything they watch has to line up. I think you're fortunate if you have confluence with 2 or 3 things. Not everything's going to line up, especially if you look at multiple time frames.
Right, and if you're looking for too many things to line up, then you're going to go crazy.
Yeah, you definitely you know, start using mental stops, and your first stop will be at the mental institution.
Mm-hmm.
So
right.
okay, so euro is something that you're focused on. What else? Or did you have more to talk about on the euro?
What more do I want to talk about on the euro?
Do you have more to add on the euro?
Yeah, so when we talk about probabilities of something happening over another, you know, I'm looking for evidence to show me that the probability of this dropping exists, right? I'm not just thinking it's going to drop because we're hitting a supply area. I'm looking to see if there's, you know, telltale signs that this is going to happen. And so a couple of the telltale signs here is that this area here, where institutions filled in about 8,000 long positions last time price was here, it's been removed. All right, so when price drops and starts to remove demand zones, that means there was more supply than there was demand at those levels. So when price retraces back up to the area that caused the initial drop, that tells me they're more likely than not pushing price back up so they can reduce more of their long positions and take more profits on their longs, because they were adding long from down here, you know, and they're adding, and there's only so much adding of long positions you can do until you want to take profits on those long positions. So that's what I see here. The COT report is suggesting the exact same thing. We see over the last few weeks they closed off some of their longs for profits, reducing longs from 262 to 258 to 251,000. And they also reduced shorts, which is a good sign for longs, because, you know, if they want to overall bring their exposure up from 70% or 69%, they can easily bring this up to like into the 80s. So if they're going to do that, they're going to do it one of two ways. They're either going to add long positions or they're going to reduce shorts. And what we see is they're profit taking on longs and reducing shorts. So all of these things put together tells me that, you know, even if this zone breaks and we see a push higher, Dale, we're still going to be within a monthly area of supply. All right, and we'll still be within a weekly area of supply.
What's the top of that month? So you have some dotted lines at new highs. And
okay, so here's the zone that if it gets broken, then that tells me we're heading to, you know, 136s. It's to do 126.01.
Okay.
126.01. If 126.01 breaks, then we have to contend with this 3 and 6 month trend line that's right above it. So we might have a false breakout to the upside and then a drop. Yeah.
Okay. So isn't that dotted line more like 670 than 601?
Which dotted line?
You have 3 dotted lines. Go down. No, keep the same chart. Yeah.
These dotted lines here?
Yeah, that dotted line.
These dotted lines just represent a weekly supply. You know that weekly supply that you pointed out earlier? Yeah.
Okay.
That's
so where's that weekly supply come in? 2670?
Yeah, about there.
Okay, that's what I was looking at.
Yeah. Right, so that's exactly a good noticing that, Dale, because you know what can happen is we can get a breakout of that of this zone here, hit the weekly supply, and then drop, and that'd be in confluence with that trend line. So that would make a lot of sense.
Yeah, plus the inside week have, so if we stay in this range for the week and we take out this week's high, last week's high, early next week and reverse, I think that'd be a pretty good signal.
Yeah. Yeah.
And end up with an outside week down.
Yeah.
That's, you know, that go around in my head, you know, on all the medication I'm on. So, all right. So I think we got the picture on Euro. What else is on your radar?
Excuse me. Oil. I like oil for long. We hit that 70 area, which we spoke of last time on our interview. We got a push up there, and now we're seeing some nice profit taking. And again, the COT report showed us that. You know, they were, look at that, 88% of their overall exposure is geared to the long side. That's just overly aggressive. So we were expecting for the last few weeks for profit taking to take place. And we just started to see.
And weren't commercials at record short levels?
Yeah, and recently they were right back here and over here as well. 1.4.
So the commercials, they were short early and they had to ride out $5, but they ended up being okay. I knew they weren't hedging oil above 62 because they were thought it was going to 70 right away. So you're starting to see reasons to begin looking for buy signals in crude.
Not yet. Now's not a good time to buy because institutions are taking profits on their long positions. So I don't want to be a buyer when they're looking to get rid of their longs.
Yeah, they still have profits.
Yeah, they want to make profits. You know, they've been buying since down here in the 40s and 50s. So, you know, taking profits at 70s is good, right? So now we're seeing a drop. Weekly trend line is broken. So there is no trend being held on the weekly chart. The only trend being held right now is the monthly. We got a monthly bearish engulfing right here. So that's a sign that we're seeing a push downwards now. We got the monthly 20 EMA just lower on the charts around the 57 mark. And right now we're reacting from some weekly demand. So right now I'm sitting on my hands in terms of wanting to get in on oil. What I'm looking for is I'm looking for a move lower, ideally. If that doesn't happen, then I'm waiting for momentum to shift to the upside on the daily chart. And I want to start seeing some daily supply zones being taken out before I get excited about going long again.
Would that be above today's high?
No. For me to get in long, I'd need to see this. For me to get in long would be one of two scenarios. I need to see this weekly supply area taken out right up here. What is that, 71? Yeah, that has to be taken out before I get excited. Or If we get a push lower here,
Yeah, 55.
yeah, 57s or even lower, I think this area stands a really good chance of holding. It's a really good area of weekly demand, and it took out a very important area right back here. Okay, so it did something. It did something important. This was an important area. That price was stalling, and then the institution said, okay, let's push it up. So that pushed up. So if this area gets broken, that means the forces to the downside. It'll leave some supply. Then we got this weekly area, which removed an important zone right back here, which was responded to right here for quite some time. So right here, the institutions filled in so much demand that it was able to remove this area. Really nice push to the upside. It's in confluence with the monthly 20 EMA. If price does drop down here and I start to see some really nice momentum shift to the upside, I'll get in long with my first target being the zone that takes out this weekly area of demand. If that makes any sense.
It does. Okay.
You know what I'm saying? So if this drops down here like this, it'll leave a zone here. If I see momentum shift, I'll get in long. First target will be here, second target will be here, and third target will be higher up on the charts.
So we're threatening a weekly breakout in gold, Kev. What's the COT saying about gold with it on the verge of a weekly breakout here?
So gold, so we see some profit taking again, right? They were getting aggressive with their long positions right here in January. And then we hit some resistance on the chart, and they took some profits, reducing positions from 298,000 to 273,000. And if you take a look here on shorts, they also reducing their shorts. So right now, overall exposure is 77% of their overall exposure is geared to the long side. We were at the 82 mark back in November. So there's room for it to go even higher. And that's what I see happening with gold.
Where's your next important supply zone above the high of 1366? Do you have any supply zones above that? Like
yeah, we got a weekly supply at 1390.
Okay. Right
here.
All right.
1390. It was tested really quickly over here with a massive drop to the downside, which tells me this area is gonna react again. So if we get a push up here, something's gonna happen at this area. We'll see a little bit of a move down, but I think eventually this zone is gonna be taken out and we're gonna be coming up to here.
Okay, interesting view. Are you doing anything with either bonds or S&Ps? They seem to be in the headlines, especially after that big break in S&Ps and bonds yields pressing up towards 3%.
No, I don't trade those markets.
Okay, so what else do you want to cover? Anything? I'm interested in perhaps some demand zones that you might have in the Dixie, if you cover that, and maybe USD CAD.
USD CAD?
Yeah.
Yeah. So USD CAD is interesting, this one, because you know the US dollar is getting weak, taking out levels, dropping, and this one's holding pretty well.
That's why I wanted you to talk about it. Okay.
Yeah. The reason why it's holding well, Dale, is because we're sitting within a 3-month area of demand. So let's take a look at a 3-month chart. All right. So a 3-month chart, we have a area of demand here, and this is demand because it took out an area here on a 6-month chart that was supply. So a 3-month area of demand takes out a 6-month area of supply. That area of demand is going to be extremely strong. So price drops into this area of demand, tests it once, comes up, hits the bearish engulf, drops deeper, and it's holding. And it's holding fairly well considering what the US dollar has been doing, like I mentioned. So what we have here is a weekly area of demand's been created right here. We came just shy of hitting that area of demand, and we got to push up. So we're stuck between a weekly area of demand and a weekly area of supply.
Where's
And
your
so
daily demand coming in again?
daily demands at 123.34.
Okay, and do you drill down any closer than daily demand zones? You go to like 4 hours ever?
Yeah, the lowest I go is 4 hours.
Okay. Okay, that's an interesting area. Your green
It's an
bottom.
interesting area.
Yeah.
Mhm.
Okay, so where 24-ish is the next 4 hour demand zone?
Yeah, 124.26.
Okay, cool. And do you glean anything from COT on this?
Yeah, so let's take a look at the COT report. The COT report shows that the vast majority of positions are on the short side. 69,000 positions are being held short versus 29,000 long. Overall exposure, 70% of their overall exposure is geared to the short side. So that's, in confluence with the US dollar. There's more shorts than there is longs. But the thing is here, just recently, the sentiment was neutral, not as strong as the US dollar to the bear side. So I'm more of a believer at this point that we're going to see a push higher, even though the US dollar is so weak. I do think over the long term we're going to see this go higher. I could be wrong, but the data is not suggesting that. The charts are not suggesting that. This is similar to.
Go ahead.
This is very similar to US dollar, Japanese yen too. This has been holding fairly well considering how the US dollar has been dropping. The only thing is that we're dropping right towards this area of demand on the monthly chart, and it's here where I expect to see price head higher.
Where, around 102? 104?
103.
Okay.
103 area, yeah, on the weekly chart there's a zone nested within it. 104,
Okay.
39
Okay.
is where the zone starts, down to 101. So within this area, we can expect to see some momentum shift and a move to the upside.
Okay, but bottom line, a higher low above the low from June of 2016. Okay, a nice look, Kevin. Anything you want to wrap it with?
Yeah, let's take a quick look at the US dollar.
Okay.
My broker is looking for a liquidity provider, so my daily chart isn't updated, but we can take a look at the monthly. And so we reacted from that 3-month area of supply that we mentioned last time, right here. Right here, we got the drop. I said what price was looking for was a monthly area of demand to respond from. Now remember the euro. Remember we said there was that weekly zone right above the monthly that was in confluence with the 3-month trend line?
Yes.
So if you look at this chart.
Inverse here. You have the inverse here.
Exactly. Right here we have a monthly area of demand that was responsible for removing a 3-month supply zone. So it's important. And we got a 3-month trend line right here. So price can drop lower, momentum shift, and then boom to the upside.
Okay. All right. I see you have a little arrow there that says reversal. Is that where you're expecting the reversal?
Yeah, I think there's like a 60-70% chance that we see reversal from up here, from down there.
Down here around 87.5. You have any numbers there?
87.5. So if we go in a little bit deeper, a really good area is 85.82 to 84.47.
Okay, that's way down there. Okay.
Yeah.
All right, buddy. So the best way for people to follow you?
You can reach me at Twitter, Magic with a K-E-V, because my name is Kevin, so M-A-G-I-K-E-V. Magic Kev, you can follow me on there.
Okay, I wish you continued success. You're one of the hardest working technical guys I know, Kevin. It's always edifying for you to be here with us, and thank you for your clarity and sharing your zones with us and your COT interpretations. Really, clarifies things for me and reinforces some of the things I look at and gives me pause that I didn't have before I spoke to you on a few others. So well done.
Thanks, man. I really appreciate it. Thanks for having me here. It's always a pleasure.
Yeah, so I encourage people to follow Magic Kev. and he's really a great technician, and he puts out a lot of great content on his Twitter stream, and he has no axe to grind. He's not selling anything, just wants to help people. So I commend you for your giving spirit, Kevin.
Thank you. Appreciate it.
All right, my trading warrior brother, Kevin Araujo, thank you so much for being with us today. So Pace and investing.com. You were on investing.com today, Kevin. So have a great day, the rest of your trading day. I think the dollar still has some work to do, and hopefully we'll see some signs of when it's right to reverse, and see everyone for TGIF tomorrow. And above all, don't just count your pips, count your blessings, and that's a wrap. So good hunting, everybody.
Take care, Dale.
And thank you again, Kev. Thank you very much.
Anytime, buddy.
That's a friend. When you need somebody and they step up, that's how you know you have a friend. Thank you, Kevin.
No problem, my friend. Thanks.